Why should a corporation consider adding Bitcoin to the balance sheet today? Not wait even a single day. Why is there a sense of urgency of why they should add Bitcoin to their balance sheet? Let's start with you.
I think there are quite a number of reasons for a legacy business to invest. So as a background, our own company started in the US about 10 years ago. In the crypto space, fundraising is extremely difficult, depending, of course, what you do, but it's not easy from a banking and VC perspective. And the Bitcoin strategy that basically our company grew up with allowed us to self-fund. So I think just from one perspective, it might help legacy companies, even if they are cash flow positive, to build up a buffer, a security buffer for when they are getting in trouble, when it's difficult. It's like an in-house credit line, just from that basic perspective.
Huh?
Oh. So I think it's it's kind of, we've all heard it's kind of cliche, but the dollar devaluation, the purchasing power issues that are out there. I think for corporations that can get exposure to Bitcoin, this is going to be a process that takes a long time. So get some on the balance sheet, as Anthony Pompliano likes to say, get off zero, right? Get it in there. Get your boards used to looking at it. Obviously, it's a volatile asset class. I thought Matt Hogan's charts earlier today showing kind of the volatility, the historical volatility of gold was really representative of that, yeah, Bitcoin's volatile, but it's actually not out of context. I mean, if you look at it compared to other assets, it's kind of following a similar path. And so I think that if you can get your exposure now, while Bitcoin is still relatively cheap, you're going to look very smart in the future. And then I think we're going to see Bitcoin fused into capital markets much more aggressively down the road here. We're already seeing kind of the dominoes falling with the major TradFi institutional players that are now saying, yes, you can have Bitcoin on the balance sheet. Yes, you can have Bitcoin in your portfolio. We actually pushed this in 2019. It was the first U.S. pension fund to buy Bitcoin in 2021. And now we're having that validation that came first with BlackRock, then Morgan Stanley, then Merrill Lynch, and it just keeps on, the dominoes keep on following.
Yeah, just to piggyback on that, I think about how really up into the pandemic, really since the late 80s, there's this trend of like decapitalizing business, right? You just kind of give the money back to the shareholders, via dividends. You could do share buybacks. And what it created was, a lot of growth and focus on like quarter to quarter growth, but it made it less resilient. And I think after the pandemic, there was a lot of wake up calls in terms of corporate treasury management, and you saw the cash positions in public companies just kind of explode. But then there was this problem, and that's inflation, right? Debasement. And so they start to think about what assets to allocate to, and there's different rules around holding securities, and then suddenly you're landing what actually outperforms monetary inflation. And really what it comes down to is there's not that many options, and then Bitcoin is obviously one of them. But you were kind of talking earlier, and there's actually, AI is the talk of the town, and that could be another topic of why there's a sense of urgency of why companies should acquire Bitcoin. And so why don't you go into a little bit, because I found it interesting.
Yeah, let me add one extra thing. I think a lot of people here are big fans of the Bitcoin Standard, the book, and you could make a case that companies are really, if they are capitalist companies, they want to be owning capital, true capital. And so the idea of keeping hard money on your balance sheet, I think, makes a lot of sense if you really truly believe in capitalism. And Bitcoin has proven this over time, over the last 10, 12 years, for companies that did accumulate Bitcoin over time. It's a benefit to actually hold hard money. The other aspect of AI that we mentioned earlier in our own discussion here was that I truly believe that, and a lot of people probably agree, we'll see very soon an autonomous AI economy where the AI themselves make decisions, economic decisions, and their native currency is not fiat. Their native currency is digital, and it's probably Bitcoin. They will use maybe other cryptocurrencies to interact with each other, but I believe they will accumulate Bitcoin. And if your company has Bitcoin and on and off ramp, it probably allows you to interact and future-proof your own business.
It looks like we got King coming up here. But Sean, okay, so a company decides to acquire Bitcoin. You said get off zero. They can hold that and just, that's okay. You know, it's a debasement hedge. They're protecting and preserving their wealth over the long periods of time. But there's also a way to do it actively. And you talked about this at the Bitcoin Treasury company, that you guys are being active with your Treasury strategy. Can you just break down the passive versus active and what that actually means?
Yeah, so I think, okay, so when you step back and you look at it, you don't see corporates holding gold, right? You do see them holding Bitcoin, though. And part of that is, you know, if you think about gold as a bearer asset, it's very difficult to get a yield on it, et cetera. It's the same with Bitcoin in the sense that it is not easy to get yield or to generate a return on it. But we're seeing that market develop now. We're seeing the options, you know, strategies on the covered calls and puts. We're seeing the basis trading. We're seeing various different alpha strategies. I think that I could tell you that BSTR, we were working on a couple of skunkwork projects that I think will unlock yield at a much bigger scale than anything we've seen so far. We have to prove it out before we talk about it publicly, but we are working on it in the background. So I think that, you know, what is your objective when you hold a treasury? Well, you are looking for a return on the asset. So this is a critical component for Bitcoin. Now, you know, I think, you know, 1.0, you know, is let the Bitcoin do the talking for you. 2.0 is, hey, our Bitcoin is an asset and is fully forward deployed and earning a return. And that's where we're kind of getting into now. I think that's kind of the next generation, and that's what's happening. And to your point about payments, I think that, you know, Bitcoin has tremendous utility here with the Lightning Network and what have you. You can't move small fractional payments online through the credit cards or the wires or the, you know, ACH or whatever. You can do it on Bitcoin or on layer 2 technologies like Lightning, and you can do it instantly, and you can do it for like fractions of a cent. So I think that's a huge unlock, and I think that's going to be another really interesting, you know, thing that will buttress your case in terms of AI and payments.
King, welcome to the stage. How are you?
Good. It's good to see you guys. Apologies for being late.
Oh, no worries. No worries at all. So you guys have a treasury company in Amsterdam, if I'm correct. So like in Europe, you guys are building it. And you also have a conference. And so we're talking about, you know, translating the Bitcoin message to legacy corporations. And so what kind of, you know, unique challenges do you face in Europe? And then how do you use your conference to help push that message?
Sure. I think as I've heard before here on the panel is the interesting thing now is in this new phase we're in, we're all going to have differentiated business models. And every Bitcoin treasury is going to do it sort of slightly different from the others. And some very different. And for us, indeed, the conference is an important component. Building the ecosystem, educating, bringing community together. Last month was a great high energy event. That was the core. That was what we're starting with, and we're strategically building out different businesses within the Bitcoin ecosystem, including, for instance, Bitcoin Netherlands Magazine as one of them. So for us, that's important. I think if you think about Europe broader. Obviously, the interesting MSCI discussion that's happening is that it's kind of become clear that having an operating business or some sort of business around it, as opposed to just holding Bitcoin, is becoming more and more important. And similar to here, what you're hearing here, we're actually also building out a variety of initiatives on our side to do that.
Yeah, it's an interesting point because you know, at Orange BTC, we have an education company, but we kind of can use that to push our mission to accelerate Bitcoin adoption, kind of taking that education infrastructure and then building Bitcoin curriculum and courses and educational resources. But do you guys think there's an advantage to having an operating company that does kind of work into the Bitcoin ecosystem? You can kind of utilize that, or do you think it's beneficial to have a kind of diversified operating business that isn't tied to the Bitcoin, isn't tied to the Bitcoin treasury? How do you think about that? Yep. Either one.
So personally, I think it's the better model if you do have an operating business that brings income in. Because a lot of the legacy companies, if we think about legacy companies, they will be smaller, potentially businesses and cash flow positive. If they start just accumulating, stacking sets, basically on a corporate level, I think that's a good way for a lot of them to start. So I wouldn't, and probably the education that you and others have been provided, it's maybe enough at this point for them to convince the owners of the business to start somewhere.
Yeah, so the Bitcoin Standard Treasury Company is really focused on building the kind of the Berkshire Hathaway of Bitcoin. So we are looking at it as we want to build a financial juggernaut that is basically a financial fortress and really do Berkshire 2.0. And that means, if you look at Berkshire Hathaway, which has, a rail company, has coal, has, power utilities, they're kind of vertically integrated across the traditional economy. We want to do that within the Bitcoin economy. So we want to have, not only an actively managed treasury, but also wholly owned subsidiaries within the Bitcoin ecosystem, where that could, down the road, that could be future payments companies, futures exchanges, all kinds of different things. And the idea being that we want to, we believe that you want to be fully on the Bitcoin standard, so we want to be generating return in Bitcoin. Our mission is to increase Bitcoin per share, where, we raised about roughly $5 billion, 30,000 Bitcoin on the balance sheet, another 1.5 billion in fiat that will be converting into Bitcoin. And, we think that, 17 years in is still super early. You're in a great position here to become kind of like a financial fortress of the future to really catalyze and fuse Bitcoin into the financial markets.
Yeah, I would say, just add to that is I think the really cool thing about Bitcoin treasuries is that it's a way for Bitcoin to be utilized, right? I mean, holding Bitcoin is great individually in wallets and everything, but it's sort of sitting there. And it's very important as digital gold, as a value accumulator, but it still stays passive. And what Bitcoin treasuries do, holding these on their balance sheet, is then they're able to utilize it and bring it part of the financial system. If you think about a traditional system, right, you have the first layer that we're thinking about is indeed building the infrastructure around it. And some of it is non-financial, some is financial. And then if you think about what Strategy is doing with all the different digital credit bonds, right, they're issuing, that's sort of a whole new market that's being opened. And after that, with a whole range of different yield maturities, different type of instruments, there's actual arbitrage that can be done on it. So you're really creating the whole swaps market, actually, in a way. So we want to be part of that in our own way, and especially from the European side.
And I think there's one really interesting thing there about the arbitrage, because if you think about Bitcoin today, I was just at the Milken conference Thursday and Friday, and if you look at kind of the development of the high yield market and the inefficiency there, and how it was not well understood, and how it was not efficiently priced, and you were getting paid an extra 600 to 800 basis points over an extra 300 basis points of risk. I feel like that's where we are with Bitcoin. You have the Bitcoin treasuries that are paying 10% yields. It's because the markets don't understand the technology and what's happening. That won't last forever. I think it's basically like Bitcoin is kind of like in that same period as like the late 70s, early 80s of high yield debt, and eventually they'll be well understood, and those fees will come down. I think actually Bitcoin should trade inside of treasuries, right? It's probably ultimately a better asset, but obviously very mispriced right now.
Yeah, I actually recently read Predator's Ball.
Classic.
Yeah, and so I saw so many similarities between the growth of that market and then looking at like the Bitcoin-backed securities market, the digital credit market that Michael Saylor has pioneered. Does the Bitcoin Standard Treasury Company, I mean, you guys have your own preferred, so obviously you're kind of going that route as well. So that's part of the Berkshire the mission that you guys are going, right?
Yes. So first off, anybody in the audience that hasn't read Predator's Ball, go get Predator's Ball. It's an entertaining read, and it will also give you a great roadmap for how the high yield market evolved. And I think we're seeing a lot of these similarities with what's happening with Bitcoin credit. And then you can go get Glenn Yago's book on junk bonds, which will really give you the deep dive.
Yeah.
But yes, so Bitcoin Standard Treasury Company, we have a convertible bond that was a 1% coupon up, I think it was 30 or 35 on the conversion. We have the preferred equity, which was a 7% coupon that was priced at a discount. And then we did $350 million on that deal in the U.S. We did 500 plus on the convert. And then we have about 400 in common equity. So we want to have we want to have access to the full capital stack. And so when we're looking at, what we're going to do next, we're actually exploring the idea of issuing debt and preferreds in Switzerland, in Japan, other markets. We want to be a global player on that space. And then in terms of why come to Bitcoin Standard Treasury, if you're a portfolio company, well, part of that is the access to cheap capital. So if you are a private Bitcoin company and you're paying somewhere between 7 to 12% or 7 to 14% to borrow money, you come over to Bitcoin Standard Treasury Company, and our cost of capital is 1% on converts, 7 on preferreds.
Yeah.
It's very much cheaper capital, access to cheaper capital.
Yeah, I've thought about this in like the Cantillon effect. That's Bitcoiners are getting closer to the money printer, especially large corporations can get better terms on the debt. It's basically they're taking it and they're turning around and buying an asset that's appreciating at 30% a year. But let's talk about some of the challenges, because if you're a legacy CFO and you recommend this, you buy some Bitcoin, and then Bitcoin tanks 30%, and then you got to go to the board. How would you justify your decision to a board, that you made the right decision even though Bitcoin's down 30% since you bought it?
Well, my problem is I can't answer the question. We were all Bitcoiners who founded the company, so we knew what we were getting into.
Nice.
But there's one interesting thing you just mentioned. Yeah, in a world run by central banks, you want to be as close to the printing press as possible. And ideally, also at the same time, as close to hard money as possible. So I think the Michael Saylor strategy makes a lot of sense. It's like a pincer attack. So for us, Bitcoin was the silent investor that we otherwise would not have had. And it allowed us to scale the company. We did like 100 million over the last 3 years every year, returning revenue and bootstrapped from zero. So it's... The hard money itself has some kind of almost magnetic effect that it attracts more sound and hard money. And I think you can't go wrong as a legacy company if you start somewhere with Bitcoin.
So you've heard Bitcoin is the new gold rush by now. As world leaders on all sides have endorsed it as the future of money, and now you're looking to get started, we'll show you how. It's actually easier than you think. First, go to your nearest Byte Federal ATM and turn your cash to coin. Byte Federal has over 1,200 locations around the country with the highest daily limits. Go to our website, bytefederal.com, to find the nearest ATM to you. Log in to any wallet, then create an account, deposit your US cash, and instantly convert it to Bitcoin. That's it. We are the only US manufacturer and operator in the Bitcoin ATM industry, and our US-based live customer service is second to none. Go on, give it a whirl, and don't get left behind. Click the link below.